Good morning, everybody. It's Monday, July 15th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 5 3/4 at 409. November soybeans were down 19.5 at 1045 3/4. And December Chicago wheat was down 15 1/4 at 560.5. No export sales announcements out here this morning, guys. Good morning. Hope everybody had a good weekend. Coming off of Friday's USDA report, by all accounts, some surprising numbers, certainly in the corn market. Adjustments made on the demand side and certainly on old crop balance sheets. Dustin, maybe just a few thoughts to kick it off. I mean, overnight weakness here, certainly we can attribute that to maybe some weather, some geopolitical stuff that's gone on here the last couple of days. But a few thoughts from you, and then we'll throw it around the room.
Yeah, Dan, thanks. So on Friday, that WASDE report added a ton of demand for corn. So the carryout numbers all fell below where the average guesses were. So they added 250 million bushels of additional demand. 150 million was in the 23-24 crop, and 100 million was in 24-25. Certainly have seen a pickup in export sales. Mexico has been driving a lot of that for old crop. To get another 150 million bushels of usage, I think everyone was surprised by that number because we just had a stocks count June 1st. And it felt like the two of them weren't really talking to each other. I think the average guess is calling for an increase in stocks on the carryout, not a deep decline like the USDA is suggesting. So that's definitely one thing that was supportive. And does the market really, what weight does the market give the USDA economist? Because they're just estimating like anybody else. The private market, I think, does a lot of that job too. So it might be some recoil from that report response come Monday after a long weekend. Then the other thing too is like Trump's election odds are obviously spiking, over the weekend after the events of the weekend. So lots of things. You look at different sectors in the stock market that are benefiting from this, a potential for a Republican sweep. One thing we do know is that Trump has been very vocal about increasing tariffs on China, talking about maybe a 60% tariff. Yeah, beans were the first ones out of the gate lower. I don't think that there's too far of a stretch to say that there might be some additional weakness on those Trump election odds as well in the bean market. So I just wanted to throw that out there too. That could be a reason. But weather is certainly really good. Cool temps for the next 2 weeks, and not overly wet, but definitely decent rain as well.
And you just had a system go through, the last 48 hours too, through a good portion of the upper Midwest. I looked at preserved precip this morning, and they were good numbers, a couple inches, 2-3 inches here and there. Some spots got up to 6. So, it was a soaker in a lot of areas.
Yes.
Ben, interesting. Let's touch on geopolitics here a little bit. I mean, we'd be remiss if we didn't, crazy historical assassination attempt here on this weekend that I think shook everybody. Your thoughts just as we look at the markets overall, the rest of this election cycle and then out forward.
Yeah, I think this has been an eye-opening moment for the polarization of politics within our country and how wacko some people can be over the items discussed, different policies. And we've kind of lost our ground on critical and free independent thought. And people have kind of subscribed to, to a party blindly. And I think that's been something that's not a great thing. You can see after breaking news, there's some really harsh comments. We're talking, and I don't care which presidential candidate it was. I would wish that as a country that we had more humanity to respect the democratic process. I will say that from a market perspective, tying in events like this, I had one of my kids ask me, Is this the biggest thing that's happened since September 11th? And I said, yeah, September 11th is very different. I think it was much more severe. And a lot of people are calling for hyper volatility in markets as we had in the election season. But I was a young trader in 2001 when September 11th happened. And all I can tell you is markets locked up and did not hardly trade at all for 4 or 5 months. It was a very low volatility period. Very little happened. I think today we have managed money with some pretty large positions on. Certainly with Pulse spiking, that would seem to be negative soybeans, but we also had, some pretty good rains over the weekend. I think they far exceeded expectations. And we're heading into a time frame where once people feel the crop is made, things can be pretty punitive. So, there's a place in here where we stretch this band too far. We try to look at it from a mechanical perspective, and we mentioned crop insurance a lot of times. But it's maybe probable today, and that's with saying that, knowing that there's a full 2 months left of the growing season, that we may be starting to out-yield some of those guarantees and lowering them. And I think that becomes a critical component of your marketing decision, right? You want to keep that protection in place, and you do that by trying to be maybe a little more aggressive with extra bushels than you would have been at 2 months ago or 6 weeks ago. So, I think our country can recover from this. We're an incredibly resilient nation. I hope it lends itself to constructive dialogue as opposed to partisan politics. I think we're all better off that way. And we have a message to send to the world, I think, that we're better than what we've shown. So, sad day for us, I think, overall. And it's definitely not constructive to markets this morning. But again, great weather over the weekend. We're going to have to see some, just like corn last year, we're going to have to price beans for export. We're going to have to nudge our way in there somehow, some way. And you're to a point now where these markets have been pushed down so much because they have literally, we always talk about you have to feed the bull every day. Well, the bear's been fed consistently now for 4, 5, 6 weeks. So at what point do we find the unknown, the thing that comes out, and all of a sudden you're kind of in a vacuum, and maybe you have a really sharp rally? I think that's would create some opportunity for people. But outside of something major, we're probably looking at pretty good crops. We've got some PP insight coming in August. Just not something that you like to see as an American.
Yeah, today we got, that's well said, Ben. Today we've got last day for certifying acres for crop insurance, so we'll get that wrapped up. And like you said, August, we should start seeing some of that data trickle through. Dustin, we've talked a lot about corn crop insurance and, at your APH, where, you start to trigger payments and things like that. We haven't touched as deeply on the bean side. Maybe a few thoughts there, just as we've had a pretty sharp break here from being $11 only a week or so, or 2 weeks ago.
Yeah, unfortunately for beans, there's two things that make it a little bit more difficult to rely on that as much. One is that the spring price is set at $11.55. So if you grow your APH perfectly, you just hit that number on the dot, and you have an 85% policy, that doesn't really kick in until 982 thereabouts. So we're further away from the market. We have a high ratio right now still, beans over corn. So it's corn that's suffered more through the year. It's actually closer to being in the money on insurance and more likely to be in the money on insurance than beans are right now. The other reason too is that, a lot of times, and this is anecdotal, it's not true for everybody, but if you have a lot of rotation of corn, a lot of years of corn on corn, then you've strung out that rotation of beans. So your bean APH data is a lot of times older and less consistent. And therefore, if you have a low APH in relative to what you expect to grow, then it becomes more difficult for that insurance to actually work the way it's supposed to, because you're constantly out yielding your prior production history. So again, some people it's not true, and especially the ones that are rotating 50-50 every year. But so those are two things. Now I will say, if anyone bought MP insurance, that would have been bought back in September of 23.
Margin protection.
Yeah, margin protection. Those were set when the ratio was actually higher than it is today. So you had the bean number set at 1295, and that should be a pretty strong county-based policy because of that. Corn was set at 509 as well.
Okay. So, I mean, I think the point being that if you've gotten rains and the prospects are good, I know we still got to get through a better part of August here, but still quite a bit of price risk for where crop insurance can kick in for you on the bean side. Again, just highlighting, knowing exactly where you're at. You know, if anybody needs to visit about that, go through it, talk about, you know, your individual operation, give us a shout. We'll be more than happy to walk through that stuff, because these are important things to keep an eye out, you know, especially if with all the different components of this market we've got right now, from geopolitics to fundamentals. I mean, this is a lot going on right now, you know, certainly. Anything else, guys, as we wrap this morning? Everybody good? Okay. We've got crop conditions out 3:00 Central this afternoon. We'll take a look there. By all accounts, should see steady to possibly better ratings based on some of this weather that's gone through. So we'll take a look at that, visit about it tomorrow morning. Every day that, Ben, you got something for us?
One thing we didn't touch on is we have record shorts in corn and soybeans and commitment of traders on Friday. You know, and that's as of Tuesday. And I think you can safely say that they sold 2 of the 3 days following that report. So, you know, record shorts, maybe they're going to generate some more here as they're wildly profitable in both of them. So I don't know. I think that creates a little bit of a, you know, an issue when you have a short covering event.
Yeah, no doubt. Well, and we'll keep an eye on open interest too. I mean, we saw from Friday, bean open interest was up 10,129. So, you know, by all accounts, they probably sold into that market as well. But anyway, we'll keep an eye on that. Good point, Ben. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow morning.